But to open up this indicator, we head up to the indicators tab. Now we want to search for Lux Algo. This is yet another sort of famous creator of indicators here in TradingView. You can see we have tons of different indicators, but the indicator we want to use here is the indicator called Range Detector. So Range Detector here by Lux Algo. We want to open this one up. And as you guys can see, now multiple trading ranges have appeared here on the chart. So this indicator is pretty similar to the previous indicator, but instead of detecting trends automatically, this indicator detects trading ranges automatically. And trading ranges are basically sort of horizontal trends where the price is going sideways, defined by a support and resistance. And how does this indicator work? Well, first the indicator needs some data. So we need quite a bit of data in order to confirm that we have a trading range. In this case, you can see the sort of gray line right here that goes vertical. This is the point where the indicator has detected the range. So as you guys can see, from this point, the range is detected. But what this indicator also tells us is that they give us a signal when the range breaks. And when the range breaks, you will see that the color of the horizontal lines will shift color. When the trend breaks to the upside, the line will shift to green, and when the range breaks to the downside, like right here, the color will shift to red. But once again here, to use the indicator, you preferably want to combine it with other technical variables, such as price action signals. So for example, if we take a look at this breakout right here, what you can notice is that before the breakout happened, you can see we had one low right here, then we printed a higher low, and then we printed yet another higher low. And remember from earlier in this video, when we see higher lows coming into resistance, this make the resistance more likely here to break. So this was another signal that made this breakout a little bit more likely to happen. And the same thing was pretty much true with this breakdown right here. You can see that before the breakdown appeared, we also saw, this is not as clear, but you can also see that the price started to print lower highs coming in to the support, right? Which also is a signal of weakness. And once again here, let's take a quick look at the settings as well. This setting tab is much more straightforward than the previous indicator. So first of all, for the first setting here, which is called minimum range length, this is pretty much what the name suggests. You can choose a number of the minimum length for a trading range. So if you're looking for very short ranges, you can, for example, decrease this number to 10. However, when you decrease the minimum length with too much, you will find that you will get sort of many false trading ranges because the indicator only uses few candles as their data to detect their ranges. So this is from my experience, not usually recommended. The standard number here of 20 is pretty good, but if you're looking out for more sort of stronger ranges here, you can use more data. So if you, for example, use 30 here, you can see that the indicator will use more data here before it confirms the range. So increasing this number by a bit can often be a good sign. You can also change the range width. I generally just recommend to keep it at 1. The ATR length, and the ATR is basically a measurement of volatility, and the standard number here is 500, and that will do for this video. You can also change, a few style related settings here. But if you feel ready to learn more about similar indicators and price action trading, then I highly recommend to check out this course. To do that, simply click or tap on the screen right here. I hope I will see you all in the full course very soon.